Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from Woodrow Wilson, who said, "I not only use all the brains that I have, but all that I can borrow." While you don't have to be the brainiest investor to get into the stock market, you do need to use your brain if you want to make money over time and keep it. So do what Woodrow says and borrow some of those who know about profiting from the stock market. And this means the best thing any investor can do is to make use of the brain power of others by studying what they know works. For our main topic tonight, we take a look at the rising cost of energy and fuel, which is very important right now. So stay tuned as Dale and I discuss some of the best Australian oil and gas stocks to buy and plenty more. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Hello, how are you?
I'm fine. Are you feeling better this week?
Let's not talk about that. Another subject.
Okay, another subject. Well, nothing's more important to me than your health.
Oh, that's lovely. Thank you.
Because if you fall over, then I'm doing this all on my own, and that would be a nightmare. I think people would probably run for the hills if I did it on my own.
No, you're very capable.
That's
my stamp of approval for you.
So you've had a good week? Okay.
I have, actually, yeah.
Oh, that's good to hear.
Got lots of sleep on the weekend.
Well, so you bloody should. So, I'll tell you what, I didn't get much sleep with this RBA decision tonight.
Really?
Yeah, 0.5%.
I know. What is that? Anyway, are we just following the US?
I think I'm going to come up with another acronym for RBA because it doesn't make sense to me at all. It really doesn't make sense to me at all.
Yeah, if we took the rising cost of fuel out of the equation, I wonder how much that would bring things lower.
I don't know, maybe we can talk a bit about that later, okay? But now we need to get on with the show. Now, before we do get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and call us. The number you need to dial is 03 92909988. That's 03 for Melbourne, 92909988 to get things started. As always, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. Now, Janine, I know you and I are both keen to chat to everybody out there, so make sure you pick up your phone and get dialing now.
While we wait for you to call, it is the first Tuesday in the month, and this means that we take a look at the Australian market. So let's get into the charts.
Okay, on your screen right now is, I've got to put my glasses on for this one. Okay, it's a weekly chart of the All Ordinaries Index.
Yes. Now, it's interesting because you didn't say I was champing at the bit to get into tonight.
No, I wasn't, because I said
You've
that for
been careful, weren't you?
No, I said that for the last 2 weeks.
You never know what's going to come back at you.
I know, you accused me of calling you a horse last week. You're a thoroughbred, but you're not a horse.
Jeez, don't go there.
All right. All Ordinaries Index.
Okay, now we can see that... we better use this so that everybody's on the same page. We can see that the stock market's actually risen over the last few weeks quite nicely.
Very strong.
And it's approaching the next resistance level though, so it'll be interesting to see what happens in the next week or so as to whether we get a bit of a pullback, and maybe this rate rise will slow things down a little bit.
It could.
That's the first thought.
It's possible.
The next thought is that something interesting to have a bit of a look at, and I thought I'd change this to the monthly chart just briefly, because I know you... I was going to say bang on about, but I probably shouldn't, talk about the All Ordinaries Index every week. So I thought... bang
on about the All Ordinaries Index.
Oh, it's enthralling to listen to you. Yeah, I really enjoy it. You've got some really exciting stuff to talk about.
Do you watch it every week?
Not every week, but I do watch you.
Wow. That's a compliment, I think.
You're impressed?
I think I'll take that as a compliment.
Look, I'm sure a lot of the viewers watch you as well. And look, I just thought I'd like to throw in something here a bit different that you don't talk about.
Yes.
Now, this is the chart of the All Ordinaries, obviously, again.
So the bars are all
That's the bar chart, yep. Yeah. So the green, blue, red, that's our bar chart. The line chart that we can see over the top of it is actually our materials sector.
The materials sector, yes.
Which shows how it can differ significantly at times and then just follow the market as well. So we saw that big rise prior to the GFC where it was pretty much in line. Everything was bullish then, and our materials and financials, after all, drive the market. So
the materials didn't fall as hard as the market.
Well, it's
that rose stronger.
It's sort of not exactly an exact science, because I've overlaid this over the top of the All Ords without a scale. It's just more showing the pattern and how things unfold. So we can see that the materials sector actually had this big decline while the overall market was rising. Then we made a low at the same time, which is logical. And then off we go again, and big pullback in COVID at the same time. Now we've seen more volatility on materials than we have in the overall market, and that's largely to do with what the financial stocks were doing. So if we expand that out, we can see that there. Now, often materials are the first to take off in the market when there's a recovery. So we're still seeing the materials sector pointing down a little bit, and we really need to see that kick back up to drive things higher. It'll be interesting to see what that interest rate rise does to everything in the short term. But looking at the picture here with the financials is the other area that's driving the market. You can see how closely this more closely fits what's going on more recently in the market with the dip that happened back here in, I'll just expand that a little bit. So you can see the dip that happened in January, which we can see was the financials driving that, and then the pullback here more recently, which is pretty much tracking what's happening on the market. After all, financials are a significant part of our overall market.
Well, we know a few months ago, in the early part of this year, we were saying with financials and materials, we generally were going in the opposite direction until they got together and went the same direction. The market wasn't going to be strongly bullish or bearish.
Yeah, that's right. So when we see them together, it's interesting as well. So we just look at that now on the chart. And you can see that the blue line, which is the materials one, and the green line, which is the financials, obviously track differently. So during the major corrections, we'll see both, make those moves down. So it's not like one sector of the market is always going to be more defensive than the other. And in these major corrections, everything's going to go down at the same time pretty much. There's usually a slight change where the peaks occur. So some sectors really peak early, and that's also interesting to watch, and while others will peak late in the cycle, which is what the materials sector did at the time. So we're seeing here now, as we go forward, we can see financials was a lot more volatile through that Royal Commission. And what was interesting to me is how the materials sector had this big decline down into this low, but it occurred in 2016. We had the correction in the financials at the same time, but then we had, with the Royal Commission, we saw a big dive, whereas the materials were not really making a move down in 2018. So we need both sectors, I guess is what you were saying before, to move together for the market to really push higher.
Okay, last few words, and what I mean by few is the active word. Where do you think the market's going to go in the next 3 months?
Well, look, I'd like to say that it was going to go back up and challenge this high, but I'm not convinced just yet, because I think the market really needs to get through that high in February 2020 for that to happen.
Okay, fantastic. Well, that's it for the Australian market, isn't it? It
is. Thank you very much. That is all we have right now on the Australian market. It's time to get into our first email for the night.
Alrighty, our first email question is from Dylan, who says, "Hi Dale and Janine, I would like to get your thoughts on Orica Limited. I don't own this stock, just looking at an entry point. Looks like it's on a steady uptrend with multiple touches of a trend line on a weekly and monthly chart since around October 2021. It's also broken above its 20-day moving average, and would like to get your thoughts and expertise on this stock. Thanks in advance, Dylan."
So what do you think of Orica?
I've got to put my glasses on for that.
It's one of the messiest stocks on the stock market, next to Boral and Brambles. They're also very highly volatile shares. Orica is one of those as well.
So that's a monthly chart, yeah?
It's a monthly chart. It's been really stuck around this level here, around $17. It'd be nice to see it get above it, but still the long-term direction's really unclear.
So let's have a look at can we have a look at a weekly chart as well?
Yeah, look, I think that's a really important point, because he's raised this issue of the 10-day moving average.
No, 20-day moving.
20-day, sorry.
Well, it's a 20-period moving average.
Yeah, but no, it was 20-day. So I put it on the daily chart, but you can see when you go to this is actually based on the bars, this line. So that's why I'm showing it on the daily chart.
Well, I had somebody asking me today somebody making a comment on YouTube saying you don't use a simple moving average or an exponential moving average, and this is just a simple moving average on it. So if you want to understand that, just Google what they are. But we don't, because we don't find them accurate.
Well, I mean, if you're trying to trade that, you just get blown in and out of that so many times, it's just not even worth doing. So I just, like you, I just wouldn't even see the point in using a 20-day.
Well, I've never heard of anybody using a 20-day moving average. I just don't think it's not a one I would ever use anyway.
Yeah, I mean, I can guarantee you that where people have picked it up from is either a chat forum or some brokers talked about it.
Yeah, well, this comment was saying, somebody said, oh, you bang on about trend lines, but why don't you use SMAs and EMAs or exponential moving averages? And I went, well, I've done so much testing on the trend lines that we do. Every time we absolutely cream exponential moving averages and simple moving averages on profit. So, and that's why I don't use them and why we don't use them. It's also why we don't teach them. I mean, they're simple, but lazy, I think.
Okay, that's a really good way of putting it, actually.
They're simple, but they're just lazy. If you want to make more money, use trend lines. Simple.
Yeah,
As simple as that. Anyway, but we do have a call for tonight, Janine. Welcome to the Australian Stock Market Show. You're on with Dale and Janine. Who have I got on the line?
Paul.
Paul, welcome to the show. Where are you from?
Perth, Western Australia.
Fantastic. Paul, and you've got a question for us tonight?
Yes, company question. I bought the Red Book a couple of months ago, and a really good book, Dale, thank you.
Thank you.
And one stock that I've been looking at is Technology One.
Technology One,
and I suppose it's a case of, I seem to see it come up quite a lot at the university, at my local government, and I look at the long-term trend chart on the monthly, and it's beautiful since it really floated. And then I looked at the weekly chart, and my question is, looking at the weekly chart, it's been in a downward trend since about last October, until about the middle of May. It actually reached, though, a low point very early in May, but it tested that low later in the month and has risen up. So given those three factors, would you say that on the monthly chart and then on the weekly chart, having tested the May low and not gone below it and now gone back up, that would be a buy signal?
Look, I think you're onto something here anyway, but I'll let Janine in her wise words of wisdom let you know what she thinks, because I'm looking at you and she's looking at the chart, making up her mind now. But thanks for the call, Paul. And if you want to be like Paul, give us a call now on 92909988. Janine.
Okay, Paul, really good question. Interesting stock, that's for sure. There's long-term support across here for this share. I guess the question really is, has the personality of the stock changed with this move that we've just seen? And is that the end of the vol?
Well, it looks good to me, doesn't it? Well, it looks good to me. I'm not sure.
I'm so excited about it, I can't speak.
You're speechless. That's the first for everything, isn't it? Jeez. But it does look really, really good. I mean, obviously we've seen, and what you're talking about, what Paul was talking about, it came down off of this high, came down into this low in May. And you can see here, looking at this, it did find some support, and I've spent the last 3 months. A lot of indecision around this May and into June, but what we've seen here is he talked about on the weekly chart when he said, let's go to the weekly chart. We've seen this move down. It's a higher low than that one there that was in mid-May, that low of 955. It made a higher low there at 975, and it's moving up. So look, I think, Paul, I think you're on the money, mate. I really do think you're on the money. I think it's nice looking at the moment. It's nice. Obviously, we're only 2 days into August, so that last bar there on the monthly chart over there looks super, super strong, but it's only Monday and Tuesday of this week on it. That's these 2 days, but looking really good at the moment. Getting close to its all-time high. That's probably the only thing that I might give concern to. You can see that's at 1360, so if we do that little bit through there, we can see there that's about 11%, so not a lot of upside from where it is through there. But at this point in time, I would say yes, I would agree with you on the buy signal. Just possibly there may be some resistance around this, but it doesn't necessarily mean it's going to stop from that point of view. But love what you're talking about, but I do think that's what we need to talk about on Technology One. Are you okay now? Do you need me to pat you on the back?
He's just blown me away. That's brilliant.
Do you need to rub some Vicks on your chest or anything?
I don't think we should go there.
Okay. It's up to you now.
It's up to me, all right. All right, 11% to that high, Dale. I think that's interesting. Well, our next email is from Omar. Hi, I've been going through the very long process of backtesting every share on my watch list, looking for the best strategy to trade each share. So my question is, do shares change personalities in the sense that one set of trading rules that may have worked very well in the past does not work anymore? And if this is the case, should you limit your backtesting to a certain time frame? For example, in the sense of TPG, should I backtest rules from 2016 only, rather than back testing rules over the entire time frame of the share. Kind regards, Omar.
Now, Omar is one of our students, so that's why he's back testing. I just took a whole big chunk out of his email because it wasn't relative to tonight for the show. But it's a really interesting question, isn't it? Because stocks do change. It's like anything. Like your partner changes personality from week to week or day to day. Your kids change personality depending on what's going on. Because stocks often reflect they don't. They always reflect the psychology of the market at the particular time and the perception that the market has towards that stock. So if they're putting out good reports, the perception could be good, and therefore it's much more bullish, less volatility in terms of rocky road, if that makes sense. But if the market's unsure, then you're going to get those sideways periods, etc. So yes, when you're back testing, you need to keep that in mind, Omar. It's more of you'll have a set of rules, and this is when you finish the course, you'll have all of this put together. So in your last couple of modules that you're going to have, we're bringing all this together for you, and that's what our team help you do, because you'll have a set of rules for bull markets, a set of rules for bear markets, and a set of rules for sideways market. But more than that, you'll understand when one set of rules is not going to start to work for you again, because it's like having a crystal ball. It's like knowing that when you come home at night after out drinking with the boys, that your wife's going to hammer you because you're
Don't
late.
assume that everybody does that.
Well, I'm not just saying, I'm just using a general example. I get in trouble occasionally. I just have a level of trouble that when I make a decision. If it's going to be I'm in trouble for 10 minutes, that's an easy decision. If it's 10 weeks, that's a whole different decision.
Mate, if you did that, you'd be off the Richter scale.
I know, but that's why I'm saying if I do this or I buy that, what kind of trouble am I going to be in? But I already know that when I'm making the decision. That's what I'm saying.
Okay.
So it's like looking at when you're back testing is making sure that you understand what the market's doing, but you know when the market's going to turn, and that's what all the rules that Janine now will help you with.
Yeah, I think, what's interesting too is the time frame over which you're trading.
Yeah, that
and how
changes
important
too.
that is in it as well. But I mean, I guess, if we told people everything, they wouldn't need to do the course, but they definitely need to do it to understand how that all works, because it's a really involved process.
Well, just talking about it on the show, people, they intellectually understand what we're talking about, but they just don't know how to do it. And
Well,
they
I
won't,
say to
and it's
some
not possible.
students when we had this, when I was involved heavily in the support service, I would say to them, you're becoming the scientist, essentially, and putting the scientist hat on and learning things that less than 2% of the population actually know.
I became a mad scientist anyway.
Really?
Yeah, I became a mad scientist. But if you want to talk to Janine and I, remember, pick up your phone right now and ring 03929 09988. So we're champing at the bit to talk to you tonight, so give us a call. We have a question now, or an email from Reese, I believe it is, who says, "Hi Dale and Janine, love your show. I have a question about Computershare. I've been watching this stock for a while now. It's been in an uptrend since the COVID crash. After a recent pullback over the last few months, it then rose to hit an all-time high a few weeks ago. I was wondering, should you be cautious when stocks hit all-time highs, with it also trending up for the last 2+ years? And do you see more upside to this stock? Thanks in advance. Regards, Reese." I know you have a lot to say about stocks at all-time highs.
Yeah, look, the biggest thing to think about is often stocks can go through their all-time high, so you're really right in actually raising this one, because they can often go through and then turn and reverse again. So that's a challenge, especially when stocks become so extended like Computershare is. But that's not to say it couldn't keep going. I mean, look at what CSL did many years ago when it was trending up strongly.
Just kept going.
We thought that it was going to stop and it wasn't going to keep going based on
It just went.
some of the analysis, and it just kept going, didn't it?
Well, it was like that Effie or someone, she goes. It was just going, wasn't it? No, it wasn't Effie, it was somebody else back from the comedy thing, I don't know. You have to be old to remember that one.
Yeah, okay.
So
Comedy's changed since then.
Yeah, I know, it's got worse, hasn't it? But anyway,
There's a lot
Computershare.
more, other language in there.
Yeah, now it's
than there
got a
used to
lot
be.
more crass, hasn't it? Anyway, I'm not going to say any of those words
No.
on this show because we're a family-friendly show.
That's right.
Computershare is still going to go up. What do you think?
Look, I mean, there's a potential for it to keep going a little bit further. Right now, we could, if it does take out that high, we could see it head to $28, $29, possibly even $30. However, it's just you have to weigh it up against other stocks that have the potential. Now, this is in a nice trend, so that
It is.
in theory, the risk is low. So what have you got to lose if you took a trade in? That's really what you're asking.
Well,
So
that's
it's
really
about,
what we talk about, isn't it, with our students, is saying if you do take a
Well, when do you
take
know
a
you're
trade,
wrong?
When do you know you're wrong? At what point? And that's where most people don't understand, or they don't know how to work out where they're wrong. And that's why we see so many people sitting on large losses on stocks, because they don't know when they're wrong or exit. And then they don't want to take the loss, because then they go, oh, well, I've lost and I've made a poor decision, blah, blah, blah. And then they make a worse decision by hanging on. So right now, this is looking good. It's possible it'll go through the all-time high. That's what you're saying. But right now, would you take a trade on this? Probably not.
No, because you're looking for upside potential.
Correct.
That's the thing.
Yeah. Cool. All right. Well, that's it for our take on CSL. But Janine, it's now time to get into our topic for tonight. Now, we know you may have been feeling the pinch every time that energy prices rose, but as you know, every cloud has a silver lining, and one person's problem is another one's opportunity. So we want to share with you some information on the energy sector that may get you thinking differently to the way the herd has been led to think and act. And no, this is not about how to find the cheapest fuel. You can watch mainstream media for that, along with all their tips on how to save energy or find the cheapest supermarket. Tonight's really about making a profit from rising prices, and we will share with you our thoughts on the best 5 oil and gas stocks to help you do just that.
I've so been looking forward to this show, as I really want to help and empower people to look at what they are being told in a different way.
Well, I'm with you on this one, Janine. When we focus on what something costs, or what it costs us, we actually miss out on the opportunity to make money. Now, if all you look for is how expensive something is, then this is all you're going to find, as everything will seem expensive to you. Now, if instead you look for the opportunity when something presents, then you will prosper. So, Janine, what have you got to share with everybody tonight?
Okay, there's a graph which shows how fuel prices have risen from around $1.50 to over $2 in recent times. So it's no wonder there's this concern around this at the moment.
Now, this graph reveals the bigger picture here, and when you can look at the price of anything in a graph, you actually see more of which can change your perception. Looking at this graph, one positive I see is that the price appears to be coming off its high now, which may mean it could settle lower.
Yes, agreed. Oh no, is this going to be one of those shows where I have to agree with you again?
Well, what do you mean? I agreed first.
I might cough a bit more.
I agreed with you first.
You always have to be first off the block, don't you?
You want me to answer that? Seriously? Now, this may be a dumb question, Janine, but how is the price we pay at the fuel pump determined?
Okay, good question. And it's not dumb. We all know that oil prices have been rising, but it's not that simple. According to the ACCC, the price we pay at the pump changes with international benchmarks, with changes in the value of the Aussie versus US dollar. It's also influenced by competition and the pricing decisions made by the fuel wholesalers and retailers. The point is that the consumer has no control over what they pay whatsoever, unless you choose to drive less, and not everyone has that choice.
Yeah, unfortunately, that's the reality for some. Now, I know that the ACCC also explains that the benchmark for regular unleaded petrol is the Singapore MOGAS 95 unleaded price, which is influenced by the international price of crude oil.
How right you are. That's one good reason to keep an eye on a price graph to get a feel for where the price is headed. Now, the average fuel price across Australian capital cities is generally higher than this benchmark by a margin which varies due to the factors mentioned.
Okay, so there's a bit of trivia that you may have been blissfully unaware of. Now, there's also the government's excise tax, which was cut recently in half. However, this is due to rise back up to its normal point in September, I think, isn't it?
Yes, that's so true. Here he goes again. He's right again.
I'm always right.
You're right, Dale, but what we pay for fuel depend to a large degree on whether oil and international fuel prices fall around the same time. So let's take a look at one of the price charts for oil to get an idea about 2 possible scenarios for the short-term price trajectory of fuel. But before we get into that, Although the stocks we plan to share with everyone tonight have exposure to oil and gas, we're not going to cover gas prices in the show as we just don't have the time to cover both commodity charts. So let's get into the chart of the oil price chart.
Okay, so this is the price of light sweet crude. Now, I'd like to know who tasted the oil to see it was sweet, but anyway. But this isn't an example. Now, we could go into different oil charts, but we'll keep it really, really simple for tonight. And we all know we want to hear, everybody wants to hear our thoughts on the stocks.
Now, the chart shows that oil has risen by around 44% in the financial year.
Wow,
now,
that's pretty good.
Yep. Now, it doesn't actually show that, but it has. Prices have come off the boil as the fuel chart we showed earlier indicated. Our analysis indicates there's potential for further downside in the short term. But looking at the chart, that you have to say is it's long-term bullish, which is interesting.
Well, it is interesting because with the big drive to go to renewables, you really would think that prices would be falling, wouldn't you?
You would, but the whole equation of supply and demand is quite complex, and COVID made it more so. We mentioned this on our previous show on the energy sector where we covered renewables. If you haven't watched that yet, it's worthwhile you doing so. But let's get back to oil. Based on what is known, we could see oil fall by 10 to 20% in the short term. If it falls below $76 a barrel, we could see the price head towards $60 a barrel.
Yeah.
So we're looking here, there's an interesting band between 80 and 90. If it falls below that 80 or $76, we're going to 60. That's basically what it's showing. But because it's long-term bullish, we have also to consider that prices may escalate again back to challenge recent highs. If the price shoots back above $110 a barrel, there's a potential for a rise of at least 30% to the historical high of $129.83. So this means more profits if you're trading the right stocks.
Geez, I remember that one. So if someone made an investment in a stock that rose in line with the price of oil, Janine, then they could make a lot more money than the extra they would spend at the fuel pump over the same period. That is depending on, of course, how much they actually invested in the stock.
Yeah, and that's right. It's the right way to think about it. Remember, if you focus on what something's costing you, all you see is what you pay out and are not focusing on what you get. What's really important is to change your perception to focus on how you can benefit. That's what takes you forward. It's a bit like what happens to some people who want to learn how to trade properly. They focus on what the education costs and not what they get from it.
Okay, Janine. Now, I do agree with you on that, but I also know everyone wants to look at the charts. So can we actually move on and have a look at the charts?
We definitely can. How do you know they want to look at the charts?
Well, I'm a telepathic person, psychic, that sort of person. Well, no, they write to me all the time on YouTube and everything else saying, look at more charts.
Okay, let's go to the charts. So we give you more of what you want.
All right, so we're going to look at 5 charts now.
All right, we've got 5 there. Yep. Obviously, Woodside is a big one,
Yep.
WDS. It's a $28 billion company. It was at the time when I created this chart. And just to have a look at the monthly chart, we know that energy was in a long-term decline until more recently, and Woodside's really pushed higher.
Yep. Just looking, we covered this last week of quite a bit.
Yeah, well, look, quite a few people ask us about this particular share because it is an interesting one. So, you know, if it keeps moving up, and we said last week if it trades above that high, then we think it's going to continue to run higher. So that's really what we're waiting to see. But isn't it interesting that how the oil price has been sideways pretty much, and we've seen the same sort of effect on the oil price on Woodside?
Okay, so what else have we got?
Okay, so Santos, and you know, I like to stick with the bigger companies. Basically, there's more liquidity in there, so, you know, more reliability. $25 billion company. You can see the same thing. We had this massive decline, but Santos is it's a different animal to Woodside. Now, when you're looking at stocks, if you can find, as I've said on previous shows, if you can find stocks that more closely replicate the underlying commodity, then that actually really will help you in being able to trade it. This one can provide some really good short-term opportunities, and we actually thought that it was going to continue on and break above that high recently, but it didn't. So it's about managing your risk on these type of shares, and better to be out of them than in them when they're pulling back. So I'd just say, look, wait and be patient until it shows that it's going back up again.
But it's been a little bit of a challenge, this stock, hasn't it, to try and get moving in a sustained trend at the moment, isn't it?
Yeah, it's really choppy. It goes up for a few months, then down and up for a few months, but eventually these moves turn into long-term trends again.
Well, they do, and the thing is, at the moment, we had such a long-term downtrend on this stock from that sort of 2008 high down into that 2015 low. Massive, massive downward turn. Now, I remember, back years ago around that high in 2009 when oil was at $120-something a barrel, both you and me were pushing out in the media that we thought oil was going to halve in price, and everybody thought we were idiots.
Yeah.
They thought we had crystal balls and we should be in straitjackets.
But I didn't predict the light sweet crude to go negative.
Well, we didn't predict that either. We didn't predict that, but we did say oil was going to come, halve in price. But people saying, but it's a rare thing, oil, because it's a diminishing commodity. How can something that's going to be less of all the time? We can't make more oil. How can this be going down in price? It should only be going up in price. Well, but how would we talk about with these renewables?
Well, it's with the supply and demand and all the things that go on behind the scenes that you just have to read some books that talk about history to understand the oil price, which I've talked about in some podcasts that I've done. There's some really good books written about it.
Obviously, Labor's in and the Greens are in with Labor, and they've got some scary things they're talking about with renewable targets and stuff like that.
Why is that scary?
Well, because I don't think it's achievable. Like, seriously, our prices of everything are going up because renewables are, 12% of our energy at the moment?
Well, you've got to have a target.
You do have to have a target, but then there's got to be realistic. What is realistic for us to do as an economy and as a country, and what's the transition period onto that? I agree with looking at the environment. I don't have an issue with all of that, but let's be realistic about it all and looking at their targets. And if they have a much bigger push to renewables and say, well, we're not allowed to have cars that have petrol in them in 10 years' time, that's not achievable. Now, I know they're not saying 10 years' time, but they're not saying much longer than that. That's completely unachievable. So that would change, if they push that in, how would that change stocks like this who are obviously using oil and obviously producing oil out for the economy? And they're the things that we've got to worry about.
I agree. Look, there's a lot of questions there, but I think everything's moving in the right direction. It's just a question of what degree is what you're saying. What can we do?
How can you do it? Because as I said, I don't see what the targets they're putting on is even remotely possible for us or anybody to
I
achieve.
guess your perspective would be different if you were one of those islanders living on those islands where the water's rising and their whole livelihood's going to change.
I think that's enough for another show.
Okay.
Otherwise, we'll get our boxing gloves on.
Yeah, we will. All right, the next one we've got, it's Beach Patrol, and we've talked about this one as well on the show. I really like this little share. It's done nothing really much over the long term except trade sideways. However,
it's a trading
and that's why
stock,
it's a trading stock.
It's a real trading stock.
Yep, you took the words right out of my mouth again. Okay, so look.
I told you, I'm in front of you all the time.
Ah, geez. You can see the $2 level there. It really is to get back above that level though, because there's always a risk that these stocks, because they're so volatile, they can just turn on a dime. And you think they're going up. Like through here, we can see that there was a really nice rise in February 2014. There was a bit of a sideways move. Some people probably bought in there thinking, oh, it's up long term now. And then we saw a big dive, with the commodities all coming back. So
it's a great stock to trade, and I know you can trade this quite successfully if you know how to.
You could trade it for a number of months.
Make really good returns on this sort of stock. But you do need to have the knowledge on buying and selling and making sure you're managing that correctly. But if you're buy and hold, you're not going to really make much money out of this, are you?
Yeah, and look, it's not one of those ones that you could, because you can just see what happens every so often and you'll just come back right to ground zero. So what's the point in holding that?
I think it looks awesome right now. I think it's a great choice.
Okay, so we're looking at that. It's a $4 billion company, so it's good to keep that in mind, the size of the company that you're looking at, because you're more likely to have a better outcome if there's more liquidity behind it. So, especially for the resources type companies.
Karoon.
So this is Karoon Energy, and you can see there that it's a nice little move off the bottom. And I think someone actually wrote into us about this once before.
They have, yeah.
I really like this, so we're going to just put some lines across here. You can see there's a really strong resistance level, so that's why it's pulled back from that. But if it gets through that, that's going to be interesting, isn't it?
That will be massive. I mean, a massive, massive move down from 2010 to 2020.
Yeah.
Huge fall.
I mean, just have a look at the sort of volatility. You just need to know the personality of what it is that you're looking at. It's a 40% fall in a month.
Yeah.
It's not shy, is it, in terms of the movements?
It's not shy with the movements, but right now it seems to be trending better than it's ever trended. So that's a good sign to me. That shows there's more liquidity in it.
Definitely.
There's much more certainty in it at the moment. So it's looking like it's going to move, but it's not a big mover in terms of...
Not yet anyway.
Not yet. That's really what I was getting at, because the more this thing moves up, the more participation or more volume will go through it, and the faster it'll run.
Yeah, and it's a nice size. $1 billion company is a good size company
Not
to
too
be
bad.
trading.
What's our last one we've got?
Okay, the last one we've got is actually Carnarvon Energy.
Yep.
So this one's 369 million. So when you start going down the run, you don't want to go down and scrape the bottom of the barrel. I'm not saying we are here. We're still a reasonable
Definitely
size,
another
but you can
trading
see the
stock, isn't
difference
it?
in the personality. It sort of looks like a heart monitor, doesn't it?
Well, it depends on what kind of heart you want. Jeez. I don't know, is that good? I suppose if it's going up and down, that's what you want, isn't it?
It's still alive.
You don't want a flat line.
That's right, that's the point. Okay, so we're seeing a bit like Beach Energy, really. We've got this sideways move here, although Beach has managed to move up higher. This one started to come back, but it really needs to get back above about 35, 40 cents before we know that it's going in the right direction again. But just bear in mind the type of personality of this share. This is no shy stock at all.
Yeah.
And so, you really need to have your wits about you, and it's about short-term trading, not about medium to long-term right now, unless the trend changed.
And this is a monthly chart. We're not talking about this is not a daily chart or a weekly chart. This is
I
a
can
monthly
flick across
chart
to
we're
just
looking
out of
at.
interest, let's flick across to that weekly chart and just see what's going on there.
It's completely different.
Yeah.
I mean, have a look at that bar in March where it just gapped right up and then reversed straight away.
Well, this shows you this area here in 2020, and even before that, shows you how illiquid it is, because you get so many of these bars that are sideways.
Yeah.
So you can see that it's not really moving a lot, and then all of a sudden you get massive moves in one direction or the other.
But the volume at the moment, if we look at the last few months, I mean, obviously through this sort of sideways period, you look at volume was quite low through here in terms of overall low, because it was higher through here.
And then it looks like it's being dumped, doesn't it?
Being dumped through here, yeah. So it's really different. If I use your little tool here, you look at the volume here. So the average volume somewhere around about that level. So we're seeing all this year, it's had higher volumes going through it.
Yeah.
And it's all been down, the volume. So it's really interesting how the market is perceiving this stock right at this moment. But as we know, things that go up come down, and things that go down come up.
Exactly.
So, to me,
But
looking at this...
I wouldn't be buying it right now. I mean, any stock needs to prove itself before you're wanting to put your money into it. That's really the point, isn't it?
Well, that's the point you're trying to make, and saying, okay, it's about having that whole area and saying, okay, when is the stock going to find support and start to rise again?
Yeah.
And having watch lists. And this is one thing I was talking about to our students on Friday for my recording for them on Friday, that I was saying is, well, how do you develop your watch list? And looking at it, and we showed them, obviously teach them in the course, but then I showed them two different ways that we could actually use some of what we teach them in completely different ways to actually create more of a watch list, because it's about, this is the Boy Scout methodology, you know what I mean?
Careful.
Mantra. No, be prepared, not be careful. Suppose they should be
These
that as
days,
well.
it's not Boy Scouts, it's mixed. So what are you going to say now? I've got you.
There's Girl Scouts and Boy Scouts, that's what it is. So what do they do now? I'm not even going to ask, sorry. But when you're Boy Scouts, it's about being prepared, dib, dob.
You
and
do
all that
know
sort
girls
of
can play football now, don't you?
Of course I do. They used to play football when I was younger too. Not very
Okay.
well. They still can't play very. No,
Oh, geez, watch it. I've watched a few of them play brilliantly.
have you? I know some of them have got elbows coming in left, right, and no.
They're just incredible.
Anyway, it's about being prepared. You're taking me off my subject, right? So that you create your watch list so you're prepared for things to move. It's not about going, oh, I've got a position size and find a stock today and go on a chat line or go onto a broker website and go, well, I've got $5,000, I've got to buy a stock today.
Yep.
That's not what it's about. It's about being prepared. It's planning. So if you were to go to Europe, you're not going to say, geez, it's 7 o'clock, I'm off to Europe tomorrow. You don't do that. You plan it out months in advance so that you know your trip's going to be successful. You plan all the steps in the book, all your things that you need to do. It's the same with managing a portfolio and finding stocks. Is why we're giving these stocks to people at the moment is to sort of alert them to what we think will be good somewhere down the track. And you're not thinking these are 2 years down the track. This could be weeks and or months down the track where they
I know
could
the
be a
worst
buy.
thing that someone could do is if we talk about a stock that you go out and buy it. I mean, that's not what we're talking about, like Dale's saying. You've got to do your own research. For one, we always talk about direction being important. And clearly the direction of this one is down. The liquidity is, it's changeable, as Dale, as you pointed out before. So with stocks like that, where liquidity is so variable like that, your risk is going to be higher. So don't just think, if Dale or Janine talk about a stock and say, oh, look, this stock could rise, this may not be, don't get the dollar signs in your eyes and get greedy is really the message that I want to share, because that's really what's going to set you up for failure down the track. It's about saying, well, look, these are the types of stocks that I want to trade, and then really sticking to those. That's what people...
Yeah, but that's what narrowing your focus, and that's where we find traders come to us to teach us, and they're going, how do I find those 500 stocks on the All Ordinaries Index? How do I find stocks to trade? And we're saying, well, you don't need 500 stocks. The question you asked last week was about, how many stocks have you got in your portfolio, which you asked everybody who's watching. Well, you don't need that many. I mean, how many stocks do you really need? And people want to trade overseas markets and everything else. But it's just having a good set of stocks that fit the goals of what you're wanting to do, and then having a watch list of
and
those.
Having rules.
And having rules around
timing,
it. And
getting it at the right time.
Yeah, because it's, what's that, 3 Ps? Preparation prevents poor planning. That's 5, isn't it? That's 5 Ps. I didn't say the word. It's a 3-letter word. 4-letter. That's a 4-letter word, actually, isn't it? So,
oops.
Yeah, but that's what it is. It's about, and that's what we teach our students, is to make sure they've got a watch list of good stocks that they've done the work on, that they're not doing knee-jerk reactions. Because every week we see people ring up with stocks that they make knee-jerk reactions to because they've seen something in the newspaper, on a chat forum, or a broker send out an email saying, hey, this is a buy. At the moment we're getting emails around S32, or not emails from our students, but on the YouTube, people saying, has S32 bottomed? No, but people are wanting to jump in it now, and it's like, just because it's gone up for a couple of weeks. Well, no, it hasn't. It's a great stock, but way too early for S32. It's fallen over.
But I guess their egos could say, well, in hindsight, if they wait 2 weeks down the track, that, hey, Dale, it has bottomed, but you don't know that at the time.
No, that's the point. It's, you really don't know that. But I do like the stocks what you've got here. So what you're saying to me at the moment is that you believe oil is probably going to come down a little bit in the short term.
There's a potential for oil to fall.
Yep.
Worst case scenario, it could come down 20%.
Okay.
If it goes below $76, we could see it head to 60, but that's a change of the tide situation. And what would drive that? It's an unknown at this point.
That's an unknown.
But it's just about looking at what happens on the downside if it falls away, and then what happens on the upside, and just waiting for it to move one way or the other to tell you which way it's going to go, and then to what extent. So if it heads back above 110, then we could be going back up to that high.
Okay, so, and our Aussie dollar can affect some of that anyway, and at the moment our Aussie dollar is getting stronger against the US dollar. Yeah. A little bit. So, but it's a combination of those things. So these 5 stocks that you've got here all are looking good in your eyes for somewhere down the track to
yeah, I mean, if investors are looking at the stock and they're looking at the price of the underlying commodity, then it gives you a really good indication of one way or the other. And if the stock doesn't move with the underlying commodity, then there's an issue there. It's going to be harder to trade.
Cool. Any last words?
Peace to you.
Peace to me. Oh, thank you. That's very nice. Thank you. All right, that's it for our topic for tonight's show. Now, before we get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. Now, it's time you get dialing. Now, the number you need to call is 0392909988. That's 03 for Melbourne, 92909988. Now, please pick up your phone now and give us a call, because we are waiting for you to call. But whilst you're sitting there waiting for us to take the next caller, give us a big thumbs up as well. Click the little button down below, the big thumbs up, do that too.
And while you call us, I'll give Dale a bit of a kick under the table. We'll get into answering the next question, so call now. Now we have a question from Danny. Hi Janine, I was wondering, what does PLS stock look like? Long-term investment? Kind regards, Danny. Nice, short and sweet.
I was going to say he's a man of few words.
Definitely.
Very much a man of few words. What does it look like short term? It looks like it's going up short term. Next question.
Well, short term short to medium term it's been falling. But how can they be confident that it's going up short term?
Well, that's what you just said. What's it looking at right short term right now? Well, it has been going up short term, hasn't it?
It has, but is it likely to keep going up short term?
No, I think it's going to come down for a week or two.
Okay, all right.
That would be my take on it.
Yeah, I mean, look, it's possible that it could come down for a week or two. It could push back up to challenge that point there, just above, what is it, 309?
That's about a bit higher than that. That's 301 where you are right now.
It's interesting how it actually reversed so strongly around that $3 level here and fell away.
It is. I mean, have a look at the rise up though from 2020. There's a stellar rise from about 10 cents to about $3.90 or something like that. Well, 12 cents. That's a pretty good guess. 3,207% over that sort of period over a year. So that's a huge one. So I understand why people are looking at it, and this is where people get into stocks or look at stocks like this. They're thinking, well, it did 3,200%. It's going to do that again, and the answer is no. It's not going to do that again.
Well, if it does go up, I mean, I could say,
where could
let's
it
have
go?
a look. Let's have a look. It could go. It could go to $5. It's possible. It could be 30% above that high if it does.
Yep, from where it is right now, that's a pretty big move. That's a 100% rise at least.
Yep. So from where it is now,
Or pretty close to it. That's
about 80% if it does rise.
Figures. So not too bad, but would you be looking at getting in this sort of stock now?
I wouldn't be buying it now. It's too high risk and there's too much resistance. And anyway, it may turn at that high.
And it may turn at that high. Well, still a pretty good gap up to that high though, isn't there?
Yep, it is. It's in a very short term, nice little move up. It's got some reasons to be buying depending on what your rules are though.
Okay, cool. All right, well, that's it on PLS. If you do want to talk to Janine and I, remember, give us a call on 92909988. Pick up your phone now. We're champing at the bit to have a chat with you, so get calling right now. The next email we have is from a regular, actually. It's from Jazz, and Jazz says, "Hi, Dale and Janine. Thanks for providing such a quality free education and reviewing stocks for us." That's our pleasure, Jazz. I'm keeping an eye on Life 360 and have not bought it yet. It looks as though the stock has recently broken upward from the weekly trend, but I'm not sure yet whether the downward fall is finished or if it may fall further. Can you please have a look at it and give your analysis? Many thanks. Regards, Jazz. I've been watching this stock for a while because this is a really nice app.
Yeah, this is one of your little favourites, so I thought I'll just let you take it away.
Yeah, it's actually an American company listed on the Australian Stock Exchange, which is interesting. It's actually an app that, can I say, tracks your family or anybody that you have on that app for your family, so you know wherever they are in the world, and there's a whole range of benefits on it. But it has been hammered, and I know I looked at this over 12 months ago, saying it looked good, but it's been hammered since then, like a lot of technology stocks. But let's go and have a look at the chart on it, because you can see that big move up from sort of May 2020 right up to that big all-time high there in November last year. So I was talking about this probably somewhere in around here, I think. I can't remember when I was talking about it, or I first brought it up on the show. But if you're looking at that, that's a huge, huge move. And I can understand why people look at this stock at the moment. But 1 month up, that's a beautiful, strong month up in July. A really strong month up. Doesn't necessarily change my opinion that a stock has stopped falling and starting to rise. And we haven't got a lot of history on this stock, So we've only got back to 2019. So we've only got a couple of years through here to have a look at this stock, and one big move up and one huge move down, as you can see there. If you held that stock during the whole downward run, which a lot of people would, because somebody bought it right where my pointer is. If you take the ride all the way down there, that's 82% fall. So it's a massive, massive fall. I'm not convinced the fall's over. I think it could fall a little bit further, but if it does fall, it'll probably fall down to around these levels. But let's look at the weekly chart. So we've had a nice move up, 1, 2, 3, 4, 5, 6 weeks up. This is going to tell and whether it's going to be a good move. And I use my little tool here. This is what's going to happen. It'll come down. How far this move comes down through to here will determine on whether that low is the low or whether it goes through it. If it holds up before then and starts to turn, I think it could be really turning the pendulum to something that's going to look good. But if it doesn't, so right now I wouldn't be getting into the stock. I'd be sitting back, putting it on my watch list, which it is on my watch list for my little, can I say, my play money?
And it could just be range bound as well.
It could, and we see that sometimes on those stocks where they just go sideways for periods of time, and sometimes years we go sideways. So, but I do like it. As I said, I have a watch list of just play stocks, if that makes sense. And this is one of those stocks I've got as a play. I just play with it because I like to challenge myself with stocks I don't have a lot of data on, and so that's what I'm doing it. But I don't mind it at the moment. Z, you want to say any more on Life 360?
No, I think you got me at play.
Okay, cool. All right, if you want to chat to Janine and I, pick up the phone, 0392909988. So please pick up the phone and give us a call now. We have a question from somebody called Jack, and Jack is saying, "Hi, Dale and Janine. I'm new to the share market and I bought my first share yesterday. I purchased Telstra at $3.90 and intend to hold for the long term." Well done. Congratulations, Jack. However, I was hoping to purchase at $4.07 when it broke through a level of resistance. The mistake I made is that I placed an order and set my limit price at $4.07, assuming that would be the price I purchased at. Would you be able to explain a little bit more about purchasing shares and what limit price means? Also, could you please take a look at Telstra and let me know where you think it is heading for the longer term? Cheers, Jack. Great question, because it's something that happens a lot with new people on the market, isn't it? You make little errors on placing orders.
Thinking that you're going to buy it once it goes above a particular level, when that's actually the maximum that you'll pay for the day, and if it's trading below that, you're going to get it at that.
Yeah, so what Jack did, he placed a limit order. So let's say the market was trading, let's say, here, and it needed to get to this point for him to trigger his buy, which is the resistance level he's talking about. So he put his stop, or his buy, or he thought he put his buy at 1 cent above that.
Can I just share something with you?
Yeah, you can.
You don't need to use your hands.
Why not?
Because we've got it on the screen.
Oh, well then you do it then,
Come into
please.
the 21st century with me.
Oh, okay. And no, I'm not part Italian. Okay, so let's do it on the chart.
Okay. So you can see here. So what you're saying is Jack bought at $3.90, which is this price here.
Correct.
So he's put his limit order, for when it gets to that level.
Yeah, so he thought it was once it traded up to that and it went through that level that it would buy. He didn't expect to buy that day. He just expected that when it traded through that level.
So should he sell it, seeing it hasn't gone through it?
No, not necessarily. He's already in that, and as long as he's got a stop loss, which he didn't say he's got a stop loss on it, but I would believe he has got a stop loss on it. But at this point in time, he's bought it because it's the best price up to that limit. So when you set on that limit, and let's say 407 was his limit, when you set on that limit, and let's say he set it on last Friday, it closed at 389. Let's say just before market closed, he set an at limit price, or over the weekend, he set an at limit price of 407. It's going to buy up to that limit, not above it.
And what was the open?
So the open there was $3.90, which is exactly what he bought it on. So he's obviously placed his trade on the weekend at a limit price of 4.7, and which means it'll trade at whatever price up to there and won't pay another cent more.
Okay, so the focus in this discussion is about the fact that he's in a trade which hasn't triggered what he thought was going to trigger.
Correct.
And he needs to manage that downside risk in case it doesn't trigger.
Well, it has triggered. He's in it already. He just needs to manage.
Hang on.
Yeah.
It didn't actually trigger his technical entry.
Correct, but he's actually in the stock.
That's right. So because he's in the stock, now it's about managing that downside risk or just getting out.
Correct.
And
so
what
what kind of order should he have traded?
You wouldn't. Now this doesn't mean that everybody should stay in a trade where they've actually made an error.
No, I agree.
It may be that some other people think, oh, well, I made a mistake, I'm just going to get out of it, and then I'm going to wait for it to go through where I intended it to go through.
Some people do that, and I don't suggest Jack does that. So, but before
what
you do
suggesting
it, what order should he have taken?
Well, look, it depends on the broker. So what order would you set for that?
Me, I would have said, basically, I would conditional order buy at what's the call? I can't remember the name of it.
Even in saying that, right, he could have just waited to the day until it went through it. And then you're more certain about the fact.
But he may be busy and he may not be able to watch it all week, and if you think, well, might go through that this week.
Gosh, there's no excuses in this day and age. You've got a telephone.
Yeah, but...
and people can have apps. So I don't know how old he is.
You could be a fly-in, fly-out person working in a mine. You've got no internet, no phone, no nothing.
Well, look, as we say to students, you don't necessarily even have to buy on the day, and it's Telstra. We're not talking about a stock that's going to shoot the lights out overnight.
True, but you could have a grumpy mother-in-law that takes your phone.
So you could buy it days after the actual trigger occurred, and it still wouldn't matter.
You could, but he didn't.
And actually, that's a really good point to raise to people, because if people if they're in that sort of a situation, you've raised a really good point. Shall I say that to him?
I'm really good at that.
Shall I tell him he's raised a really good point?
You're agreeing with me, and I'm raising a good point.
Yeah, and that is that if you're in jobs, or you're in a situation where you can't always get to the phone or to do something that you need to do for your trading, then pick stocks that are not hugely volatile. Telstra's a good example of one of those.
example. So this would be a buy on stop to me, buy once it hit this point.
Okay.
So that would be for me. So he's bought in at 390, so he needs to calculate his stop loss on that. At the moment, it's looking good. My long-term view on Telstra is bullish. That's my long-term view, which is what he's looking at here, to trading a long-term. So I don't think it's going to be an issue, but we still need to manage a downside risk in case it doesn't go up, because it might go down for a couple of months before it goes up again.
Okay.
So we need to manage that.
That's awesome.
Cool.
Yep, thank you.
All right.
Looks like we have another caller on the line. We have Mac on the line by the look of it. Mac, have I got you there? Welcome to the Australian Stock Market Show. How are you this evening?
I'm good, thank you. How are you?
Great, thank you. Just trying not to cough too close to Dale, but he never gets sick, this guy. He's unbelievable. I try as hard as I can, but it doesn't
Only
work.
the good die young, and I must be really bad.
No.
Absolutely.
Look, so you've got a stock for us tonight. I'm really excited to hear what you want us to talk about.
Yes, Macquarie.
Macquarie, fantastic. And what's your question for us tonight, please, Mac?
Well, I find it hard to work out whether it's trending up or trending down. I thought I was doing okay for a while, but unfortunately with an expensive stock like this, it tends to rise a lot or drop a lot. So is there any advice you can give me?
Happy to give you our view on the stock, Mac. Thanks very much for your question. It's great. Like the stock.
Okay, thank you. Bye.
All right, so Macquarie is actually one of our favourite stocks, isn't it?
You know, we had a message from somebody on YouTube saying, hey, thanks for covering the banks, but why didn't you cover Macquarie and Suncorp and some of the and Bendigo? And it's like, well, we can't cover every single stock on the planet.
Well, that's right.
You know, and we have covered Macquarie a few times before, but I digress. You're going to answer, Mac.
Yeah, look, I mean, he's looking at this stock and it has fallen significantly. So let's just first have a look at what he's talking about. So he's saying here, the stock's actually come down and it's fallen almost 30%. It's part of that.
This is a great stock. I don't understand why he says it's expensive. I think he's just talking about the price. He's thinking the price is expensive. That doesn't mean it's expensive to me.
Relative to what?
Well, that's my point, is relative to what? So it's, you get less shares for the dollar, but it doesn't mean it's expensive, because at current price at $1.80 or $180, this could be dirt cheap. It could be worth $300. So it depends on the fundamentals on that stock and what the long-term aspects is for that stock. But this is a great stock at the moment. It's been a bit bearish since that high there in January, but so have a lot of the stocks. So right now we're seeing a really nice move up at the moment. Again, like I was saying on my market report yesterday on YouTube, if you haven't seen it, I think the market's probably going to come down for 1 or 2 weeks. If it only comes down for 1 week, the better. If it comes down 2 weeks, that's okay. But if it comes down 4 or 5 weeks, then we may not have had the low.
So what you're saying is that Macquarie is more or less going to follow what the market's doing at the moment?
Basically, that's what I'm saying. I think it looks good at the moment, but it's a little bit early. And when it does come down, we want to test the sellers on the market, and that's what we need to test, because the sellers, you know, they're coming in really quick nowadays and punishing the market. So when the market does turn, we want to see how voracious they are. If they pull back a little bit and the market psychology, like we talked about earlier, has changed a little bit to being more bullish, and we're seeing some of that at the moment, then I think the rest of the year is going to be great. But I'm still sitting on my hands, and that's what I'm telling people to do. Just be careful at the moment.
So even on Macquarie?
Even on Macquarie, yeah. So a couple of weeks down, I'm expecting that over the next couple of weeks. See where it lays, and if it starts to move up again, then I think it's going to be a good stock. So hang in there, Mac, because this is a great stock. But again, I don't understand why you think it's expensive, because the price of a stock is completely irrelevant to whether it's cheap or expensive. It's comparing it to something, and that is comparing it to its fundamental value. What is it actually worth? So, you know, same with the car or anything else.
He might be talking about it as PE ratio or something.
Might be talking about the PE ratio as being expensive. I don't think it is, though. I think for the PE ratio for Macquarie, but I'm not sure. But anyway, we can have a look at that. But let's get into our next little bit. And we've got some stuff that from last week that Janine asked everyone a question. And so up next, we're going to discuss a comment that you have handpicked from on the underneath, from where the underneath the videos from last week's show. So Janine's going to have done that. We particularly liked George's sense of humour and the way he articulated his response to Janine's question last week, which was, how many stocks do you hold in your portfolio and why? Now, George wrote, "Hi Dale and Janine, thank you for the great show. I'm a good-looking mid-60s semi-retiree." I think I can almost say that, can't I? Except I'm not mid-60s and I'm not retired, because you guys won't let me retire. that's another story, but I'm mostly looking for stable-ish income, companies with reasonable but not spectacular capital upside. I have 10% of my portfolio targeting the latter. I've owned happily a good chunk of AWC for a few years. My average purchase price is $1.20-ish, considering received dividends, franking credits, being a nice bonus on top of that. The average price is 60 cents-ish. I'm now thinking about halving or selling all of my AWC holdings to relocate the funds towards other dividend-paying stocks, for example, REITs, infrastructure banks, etc. Please don't get bogged into that, he's saying. So what can you please tell me about the technical outlook for AWC medium to long term, your high-level fundamental view? If you would care to share any, will be appreciated too. Thanks again, George. We don't do high-level fundamental views. We just don't do fundamental views.
Well, we do. If we've got the data in front of us, we can give an opinion on it. But I mean,
so what do you think about his portfolio structure and what he's doing?
I thought it was interesting that his comment about the income and wanting to take stocks over a particular term, because AWC is not that type of stock.
It's not that type of stock, yeah.
Even though, see, this is where people fall down, is they might see a stock that's been falling away, and because it's low relative to whatever it was previously, the dividend looks much higher, or the company decides to pay out a higher dividend to keep shareholders involved. And then they're taking on stocks that are way too high a risk relative to what their strategy is.
Yep.
So that's one point.
So he's sitting on a profit at the moment of $1 from about 60 cents average. So he's doing quite well, but right now it looks like it's going down.
Well, it doesn't look great, does it? Because, I mean, it was looking really nice, but then I can remember looking at a stock, and it's now called Ampol, but it was Caltex.
Yes.
Now, a long time ago, it did a similar sort of thing, and then it took off long term. I'm not saying this thing is going to do that, because right now it doesn't look great at all. It's about, if anyone wants to trade this one, it's really a short-term proposition, that's for sure. And like you say, it's pointing down on the monthly. Short-term on the weekly, it's really only just sort of pushed its head up a little bit, but it could just as easily turn the other way.
Okay, so let's move on. So, yeah, so it's interesting. I mean, great comment from him anyway.
It was a great question and great sense of humour.
Great sense of humour. So let's move on for that one. There's another one you've got?
Yeah, I picked a second comment from last week's question on the show, and this was from Derek, who talked about an allocation of capital to shares, and this got us both thinking. We know that the financial industry have models for the way that your capital is allocated based on a person's age. So we want to discuss this and whether this is actually the right way. Now, Derek wrote, "Hi Janine and Dale, great show, very informative. Regarding your question on the number of shares I hold and why, shares comprise 60% of my investment portfolio, and I currently hold 20 shares, including 15 individual companies and 5 ETFs. The main determinant for the number of shares in my portfolio is based on the portfolio percentage of 60%. That is 1.5 to 3% for individual companies and 3 to 5% for ETFs. Looking forward to finding out how far I'm off the mark, Derek." Great question, and thank you very much. And just on that, what's your first thought when someone...
I think his position size is way too small.
Why is that?
Well, he's got 20 positions. You don't need that many, because a lot of people, and this is where you talk about portfolio theory, what you just mentioned, is people think portfolio theory is more stocks because that's what the big end of town have. But the big end of town can't have concentrated portfolios.
I think a lot of students get a bit of a shock when they go through the advanced course for that reason, because we talk about that construction.
Well, it just makes sense. And I mean, if I had all of my money in one stock, I've got 100% risk in that one stock, haven't I?
Yes.
So if I buy 2 stocks and I split my money, now I've got 50% risk in 2 stocks. If I buy 5 stocks, I've got 20% risk in each stock. If I buy 10, I've got 10% risk in each stock. But start keeping going from there, guys, and do this on a spreadsheet. When you get outside of 10, the curve of what diversification happens drops off dramatically, and it drops off around 12 or 13 stocks. That the reducing risk doesn't really, your risk doesn't reduce much by every extra position. So don't have that many. You've got too many positions. I would halve my portfolio.
But we haven't actually answered the question about that 60%. Are we going to answer that question at all?
But that's his portfolio makeup. We're only talking about his stock portfolio. We're talking about his overall portfolio.
No, but we thought we were going to challenge what industry said. I mean, industry says that by age you have a certain percentage exposure to the equities market.
Crap.
Yeah.
I think it's total crap. But we don't have time to explain it all.
No, because if you're managing risk, then what's the issue?
What's the issue? The industry don't manage the risk, do they?
Well, look at the GFC, they just let it ride.
Yeah, manage your risk. I don't agree with it. But hey, Derek, thank you for sending in, or not sending in, commenting down below. So make sure you give us a big thumbs up for answering that for you. Anyway, and everybody give us a big thumbs up if you are enjoying the show. But that is our thoughts on position sizing. And I also wanted to thank everyone who took the time to comment in the YouTube comment section last week, or has taken the time to email us over the past week or so. So we do really appreciate your feedback.
You have been asking us questions, and each week we ask you for your thoughts. Last week we asked, how many stocks do you currently hold or own in your portfolio, and why that many? The response that we liked most was from Derek, whose question we mentioned earlier. This week's question is, what tip would you have given a good friend about what to do before investing in the stock market? So get typing and write your answer below this video in the comments section. If you are listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app that you're using.
All right, if you really enjoyed tonight's show, then please give the team a big thumbs up. It doesn't take you long. You just got to point it down and hit the little big thumbs up button, so please do that. So do click the like button underneath our video right now to let us know that you've really enjoyed the show.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call, as we'd love to chat with you. If you're not able to watch live, you can email your question ahead of the show. You do this by sending your email to, and get this, info@wealthwithin.com.au, and remember to include Wealth Within Live in that subject line.
Okay, we really appreciate your support for the show, and you can show yours for the show by subscribing to our channel and hitting that subscribe button. Remember to click the bell on the right of it so you get updated with our videos.
Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight. We have so enjoyed receiving all your emails, and thank you to those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us, and we do hope you have a fantastic week. But for now, goodbye, good luck, and good trading.
Bye for now.